But Peter McGuire, CEO of XM Australia, meanwhile, back at the ranch, the IMF is seeing bright flowers ahead and raised a global forecast for global economic growth in 2024. They just announced they expect a 3.1% global growth this year, up zero point 0.2 percentage points since their October estimate. That's all good news. That's all bullish, I suppose.
Absolutely, Sean. And yeah, I think India is really the leader there. And welcome to everyone. Happy to be back with Gulfintelligence. I think that's the situation. They've been having good numbers coming out of the block, Sean. So that's been a little bit of uplift. The overall theme, yeah, Asia's still moving along fairly well. And you're seeing the sort of numbers coming out of, South America are reasonable as well. So yes, I can understand why they're suggesting that. The other side, of course, is what are we going to experience over the next, say, 60 to 90 days before you even get to election, in the mad electioneering situation, the circus really starts to come to town with the US. But what happens with the Evergrandes? Where does the property sector go in China? And do we see a continuation as far as downdraft, as far as Chinese equities, the likes of the CSI 300 is off 1,000 points in a year, or about 25%. So is that continual downdraft going to really materialize, and who's holding the debt?
Peter, we mentioned in your earlier comment there, China, the outlook for China continues to be a little bit softer. From our forum outlook for the year ahead sessions, that seemed to be counterbalanced by very optimistic outlook. You mentioned India, we've got Vietnam, we've got Indonesia. There's other big centers, not insignificant countries, 100 million to 200 million to 300 million populations that are looking to pick up on that. From a demand side of the sort of balance sheet, Asia should remain fairly solid this year, despite China's uncertain wave. What's your outlook there on the average across?
Well, absolutely, Sean. But the other, and you've got to look at Africa as well, the likes of Nigeria, massive big populations that certainly are performing quite strongly. So, we look at China as the big picture, and I'll just say this. China's going to impact the likes of Australia, Brazil, and of course from an ore production and for base metals. Because if this property sector really starts to bite, and we're pretty sure that it will, then this is going to be a long, protracted play out. So the producers,
the fact that they put the Evergrande into liquidation,
yes.
What dominoes does that push over? A lot of people unpaid debt?
Yes, of course. You've got the likes of suppliers for, electrical suppliers, anything that goes into these buildings. Terms of agreement, pay me in 6 months. I can't pay. We'll string it out 9 months, and now the impact all the way through. So all of those supply chains,
and there's no bailout in the middle of that, like we saw in the US and other places.
Well, this is the issue, because Hong Kong said liquidation. So it rests now on China and how China plays this. And this is going to be observed, and who's holding the debt. 120 international banks and 180 domestic banks. And that's the fabric as far as debt holders. And so in turn, people sell debt, or people sell risk. So how many other banks globally are wrapped up in all of this? There's the first part. The second part is you need strong consumption, like it or not. You mentioned Vietnam, and we look at all these different countries, in Indonesia, they are producers. They produce stuff, but they need to export that, a lot of it. Sure, there's some domestic demand, but it's nice to export as well. And you need strong growth in, from a global footprint. And this is the issue that we're facing with high inflation. People have got less firepower in their wallets and purses. So, consumption's down. We're looking at auto sales. We're looking at other parts of industries that are really hemorrhaging. And so hopefully they're going to...
All those regional countries, all of them, including Australia, need a strong China to absorb all of those commodities that they're producing.
Absolutely. They're the engine, and then naturally the finished product goes back out. So it can be pig iron going in for steel production, and then, that's being sold out. So that's exactly right, Sean. From infrastructure to rebuilding of nations. I'm in India next week, and you want to see construction, go to Mumbai. Spend 4 or 5 days in Mumbai. It blows your mind. And so India is going through that as well, that transformation. They're just probably 30 or 40 years behind China in a lot of ways, but they're galloping quickly. So this is where it's going to be a fascinating, 24 and 25 as far as growth numbers, and that rolls into naturally,
This is a very expensive initiative to add 1 million barrels of capacity at a time in which you need your dollars for the 2030 vision. Peter, your thoughts on this decision and where you think this question of idle capacity goes this year versus OPEC quotas. I mean, there is increasing tensions emerging there. We lost Angola out of the group. UAE are carrying increasingly a large amount of very expensive idle capacity.
Absolutely, Sean. By the way, I'll be going. I was formally invited by Mukesh, our dear friend from Rystad, and Jaron Rystad will be talking tomorrow in Sydney. It's a 3.5-hour event starting at 2 p.m. and I'll be attending. I was invited and I'm looking forward to that. So you can imagine the depth of knowledge from gas to oil to, and I think it'll be summarized with closing comments by none other than our dear friend Mukesh. He sends his best also, Sean.
Yeah, no, I had the pleasure of going to their session here in December with Jaron, and it was very, very insightful and useful.
Yes, absolutely. So I'm looking forward to that. Yeah, so the OPEC, we've got, Thursday, and that's tomorrow. Unlikely to announce. I've just made some notes here, any changes to output in February. Production cuts around that 900,000. As you mentioned, Angola, these are the situations. I think it's a very much a fine line at the moment. You've got the situation with geopolitics, and that's very much, across everyone's mindset, what's happening and whether this escalates or it doesn't escalate, and what happens with Red Sea and shipping and so on. So as I think it's very fluid at the moment, Sean, and this creates the uncertainty as far as price. That's why, your questionnaire today, the 4 prices. This is the dilemma that traders have. Everyone's got a different mindset. Is it going to be 75? Is it going to be closer to 85? I think it's going to be higher, and I think there's good reason for that, but everyone's got an opinion, and that's what drives futures markets. So yes, at the moment, Sean, I'm keeping a close eye on what OPEC say tomorrow, and of course where the Fed come out tonight, and the overall views over the next couple of days, I think could be quite interesting for naturally futures markets and for the oil complex.